Hello, everybody. Carolina Keith here again with you. Wanted to take a moment to talk about the psychology that goes along with trading, how I do what I do, and I think it would help a lot of people understand what I'm thinking when I'm doing what I'm doing and the reasoning behind it. A lot of people ask this question, and I haven't really made a video on it because I kind of felt like I already had that part down. But I realized that some people may be missing that particular area, where to get your mind right and how to be thinking through this stuff. So let's go through my rules that I have first, and I'll kind of give some information in between there. All right. So my first rule is the most important rule, and it's rule number one for a reason. Okay. First rule is no emotions. There are no emotions allowed in investing. What do I mean by no emotions allowed? I say this a lot, but I don't get greedy. I don't get happy. I don't get fearful. I don't get sad. None of that is involved with my decision making as far as what I'm going to invest in and what I'm not going to invest in. What it comes down to is 100% purely how much money can I make off that particular investment. It's not based on who owns the company, why they own the company, who they invest with, whether they have utility or not. It's my belief that right now it's August 25th, 2022. There is no utility in crypto. You can't actually go buy anything with it. Anything you try to buy with crypto essentially gets converted to cash right before you do so, thus completely eliminating any utility that that particular asset that you bought had. So I have no emotions involved in it. I learned this along the way after failing by using emotions, by making emotional decisions. Those emotional decisions cost me so much money over the years, thinking that I had to be invested in something or I had to buy this particular one because it's the special one. It turns out I was completely wrong about that. Because I've learned that lesson, I'm trying to pass that lesson on to everyone else, to not have any emotions, to not be upset or thinking that you must do it or that it has to be this particular asset at this particular time. I don't allow anyone to help me make those decisions. It's strictly based 100% on the chart and on the data. Nothing else matters to me. That's hard for some people to understand, but it's an important step to understand, and it's the reason it's number one, rule number one. All right, so all the rest of the rules, the other three rules that I have here, are going to bounce off that first rule, and I'll tie back to it, okay? You'll see what I mean as we go along. Rule number two is an important rule. Have a realistic plan before you ever buy. What do I mean by a realistic plan? What does that even break down to? Well, here's how I go about that. Before I ever buy an asset, I look at how much money I can potentially make on that based on the chart. That's based on resistance and support, the trend of the current time frame. How does the high time frame look on a long term here? Does this look like it's actually going to gain momentum or lose momentum? If it's going to lose momentum, I don't want anything to do with buying that. How do the indicators look? Do all the indicators look like they're preparing to move up and that they could help carry the price higher so that I could make more money? Is the entire market going up? If that's the case, great. That rising tide lifts all ships, and I should be in a better position to make more money. Is this a downtrend where everything is going down? If that's the case, I need to be very careful about how I buy and sell. Otherwise, the money that I do put in could go down very rapidly, and that wouldn't be a realistic plan. So, why am I buying it? Because it may go up in value. How long will it take? Well, I assume that it's going to take between a day or a month. How long will I be in that? Well, I'll be in it until it hits a point where all the other chart things, the indicators and support and resistance, and all of that confluence that we look for in the other instructional videos that you're about to watch say, I'm going to look at all those and determine, yeah, you know what, it's time to stop. I'm going to make an informed decision based on the data only. I'm not going to allow my brain or my heart to overdo anything here. I'm strictly going to use the data that's given to me on the chart to make a better decision than I otherwise would. That's important to grasp, okay? If you don't have a realistic plan before you buy, then you should not buy. Rule number one was important. No emotions allowed here. If you come to the conclusion that, you know what, this doesn't seem like a smart play right now, your first instinct is probably correct. Your first instinct is probably correct, and you should probably stop what you're doing and rewind yourself a little bit and go, you know what? I'm buying this because I think I need to, not because I should. All right, so it's not really a rule. It kind of goes along with rule 2 and rule 3, but it's important to understand in between this little gap here that there are going to be times when you lose, and there's nothing wrong with losing. In order to know success, you must know failure. When you fail, please do me a favor and walk away. Walk away from the computer, walk away from the phone, and just think about it for a couple minutes about what happened. Why did I lose here? Go back and analyze what you did wrong. Ask other people what you may have done wrong. This will help you develop a better plan next time. It's important not to go after that exact same chart again after you lose as a revenge trade. Okay? Those will cost you more and more and more money as well. Don't be stupid here. Be smart. Don't revenge trade. If you revenge trade, you will lose. And I don't want to see that happen. Just a quick tidbit. Walk away if things go wrong. Think about it. Ask some questions. And then come back later. All right. Rule number 3 is cool too. It goes right along with rule number 1 and rule number 2, all right? You've got a realistic plan. What is your backup plan? What are you going to do when things go really bad? What are you going to do? Are you going to watch your asset tumble in value that you bought and watch it go from what was a very nice, prominent position in the chart, very high, and you made good money, like Dogecoin, at 75 cents? And you refuse to sell it, and it goes all the way back down to where it currently is, somewhere floating around 6.5 to 7 cents? Are you going to allow your emotions to dictate that decision and say, hey, you know what? I'm not selling this. I'm going to hold on to it. And I'm going to watch the value drop by over 90%. Am I willing to do that? Is that my backup plan? Because I got to be honest with you folks. If that's your backup plan, you're going to lose way more than you win. You need a realistic backup plan. I like to set stop losses. For me, my particular stop loss range is 7% of where I buy or under the next support level, just a little bit under the next support level. That way if support fails, and you'll see support resistance in a future video here. If support fails, then it's going to kick me out, and I had no decision to make. It removed my emotions for me. I made an informed decision on when to stop, and the chart stopped me out automatically. I didn't have to do anything. This is important to understand. If you do not have a solid backup plan, rule number 1, no emotions, don't buy. And rule number 2, you don't have a realistic plan. Rule number 2, don't buy. This is crucial. It should also be said that this happens a lot. Things go wrong a lot. If things go wrong, are you just going to sit there and do nothing? Now, I got to tell you, folks, if you're invested in something and you're sitting there and doing nothing, it's probably not the best play. We've broken down the numbers before for you and showed you that if you just sit in an asset in crypto for a very, very long time, you're bound to lose tens of, well, I guess you could say scores and scores of percent, meaning 20 times 20 times 20. You're going to lose a lot of percent just by sitting and watching your chart fall in that particular asset you have. A good example of what I mean by a backup plan. If you've ever watched the show Shark Tank, these people come on there and they talk about what they want to sell this guy. Oh, hey, look, man, I've got these really cool ink pens. They click, they do really cool stuff. What's my backup plan? If I do want to buy this, how much money can I make? It's a big deal. Can I make a little bit of money or a lot of money? Well, the guy says, hey, look, man, I sell these pens for $3 a piece. All right. I make about 10 cents per pen. Okay. I've sold 100 pens. All the sharks look at him and go, wait a minute. You've only sold 100 pens? That's it? You haven't made any money yet. And the guy says, no, you don't understand. You don't understand. I got really cool pens. My pens are better than everyone else's. And the shark immediately looks at him and says, yeah, but you don't sell any. So I like you, and you have cool pens, but you don't make any money. And the guy says, well, that's why I'm here. I want your help. Shark looks at him and says, I tell you what, I'm not going to give you what you asked for, which is, let's be hypothetical here, $100,000 for 10%. I'll give you $100,000 for 50%. Plus, on top of that, I want 2 cents out of every pen you sell until I get all my money back. What you've just heard is him taking a decision of, I'm not only going to invest, but I'm going to have a backup plan for this investment. I'm going to get more for my return. Plus, I want a royalty on top of that. This particular investor has developed a backup plan just in case something fails. It's just as important for you to have a backup plan. Don't have a backup plan? Don't buy. Now comes my favorite rule. It's my favorite rule for a reason. Please listen closely. Take your profits. Now, why in the world? There we go. Is that my favorite rule? This is very simple, okay, everyone? If you don't take your profits and get your money, myself or someone like me will take your profits for you. Now that sounds very, very jerkish and mean, and I understand that. However, when you chose to get in this and you chose to start doing this on your own, you decided to be your own financial advisor. You picked no more middleman. It's me now. I'm going to do it. Screw that guy. That's how you've gone about this. Now, if that's the case, you must start thinking like a financial advisor. You must start making financial advisor-like decisions. Like, it's important to take some profits here. My money, my profits. I cannot leave my money sitting there forever for someone to come along and take. It's very important to get your money off the table sometimes, especially when you already see that the chart tells you it's time. I'm not asking you to be a jerk about this stuff, but you have to be a little bit cold and a little bit calculated in your decisions. You picked this shark pool, okay? This is crypto. It's one of the meanest, ugliest shark pools. They're the most scammers out there. There's the most fake things out there. If that's the case, and you picked this shark pool, it's very important that you develop sandpaper skin, just like a shark. I'm not asking you to be a great white or a bull shark or a tiger shark and go around and eat everything, because that's going to be difficult, first of all. But number two, it's not cool to do. I am asking you to be a Nerf shark or a surf shark or a lemon shark, which is a very small shark that just runs around and gets the scraps, because let's be honest, that's all we're going to get anyway. This is a big deal. If you don't take your profits, you will lose them. So please, please be smart here. Find your areas of confluence. Think about what you're doing. Have I made good money here? $1 profit is better than $0 profit. We have a whole group of guys here to help. Whenever you see something that you think looks good, ask around. What do you guys think? What do you guys think about this? Do you think this can go this far? And many people will come to you and ask you the same question. What do you think about this one? Does this look like it's going to go up? Now, you'll help them make that decision because you're not invested in it. And they'll help you make that decision because you're not invested in it. It's like back and forth. This ball goes in both courts here. We can make better decisions as a group, and that's why we have a group. Now, honestly, y'all, that's all the psychology that I have involved in this. 100%, that's it. I don't do anything else. Rule number 1, no emotions. Rule number 2, have a realistic plan before you buy. Rule number 3, no thinking about anything without a backup plan. You better have one. Rule number 4, take your profits. If you don't follow these 4 rules, or if I don't follow these 4 rules, I will lose more often than I win. I cannot do that. This is my job. This is my full-time thing. I cannot afford to lose. Okay? Some people may, but that's not for me. I don't want you to have to live through the lessons that I've already lived through. So these psychological rules that I've developed here help you develop a personality that makes more money. Simple as that. Now, Obviously, if you need to adapt the rules to yourself a little bit, you can. If you have other rules that you want to follow, there's no problem with that at all. This is the psychology that goes into it for me. I'm going to get this video uploaded for everyone. I hope you enjoy. If you need anything, please feel free to hop on our Discord and ask. The link will be down below for our Discord. We have a free Discord, free general chat. If you would like to get all the way into it, there's a Launchpass link below also that gets you a full access to our Discord where everyone talks about all kind of charts, all kind of positions, forex, stocks, crypto, equities, bonds, doesn't matter. It's all there. Thank you all. We'll see y'all in the next video. Everyone be good. Peace.